Hello, everyone. Good morning from here, and I'm very excited to welcome you to another promising edition on our Forex Morning Mastery. In fact, our first edition for this week. Hope you all had a wonderful weekend. And unfortunately, yesterday we were not able to run through the forex market prep due to some technical issues beyond me. We tried as much as possible to make things happen, but unfortunately, we were not able to do so. But today, I'm glad things are a little bit better, at least. We've been able to have some solutions to the technical issues we're having at the moment. And of course, today we are going to be delving into the financial market with the utmost intent of strategically position ourselves for the next move. And of course, as always, we are going to be monitoring three financial instruments for this week. And this includes the USOILSPOT, the USDJPY, and of course my favorite, the XAUUSD, popularly known as the gold spot. So we are going to be looking at the three of these assets. And for those of you who are following me on my Telegram, Trading View, and of course on YouTube, you must have gotten my overview as regards to the gold market dynamics and what my intentions are. In fact, I did drop an update this morning on what I'm looking at this asset. And of course, we are going to be deliberating further into what is going on and how we can strategically position ourselves for the next move. For those who are joining us for the first time, you are highly welcome on board. I'm very excited to have you here with me this morning. And of course, what we simply do on the Forex Morning Mastery is to try and see how we can understand how market participants are thinking, taking into account the fundamental and technical aspect of the market. So that is basically what we do 3 times in a week: Mondays, Wednesdays, and Friday. So my own name is Sheriff Daramola, and once again, I welcome you to this session of our Forex Morning Mastery. So with that said, here we shall be diving right into the business for today. And of course, the first thing we normally do is to keep tabs with what is going on in the US dollar market dynamic. Of course, we know how important this asset is to all of the assets we are monitoring. There is no way you want to be trading the Japanese yen, the gold commodity, and of course the US crude oil without really having a background understanding of what is going on in the US dollar market dynamic. And of course, as we prepare into this week, all highs is definitely going to be on the US dollar. And of course, there's a lot of reasons behind this. First of all, traders, investors, and market participants in general are unsure about what the Federal Reserve will do next as regards to interest rate decisions. At the same time, we also have global tensions. We saw a soft inflation data in the United States last week, and of course, we saw shifting trading policies, which obviously is keeping the market on the edge. Now, understanding the US dollar right now is very, very key because it's the heartbeat of the gold commodity, the US also, and of course the Japanese yen. Now, what are the major things that are going to be influencing the US dollar market dynamic this week? Well, first of all, the Fed policy confusion is very there. Traders are trying to guess if the US Fed will cut interest rates soon. Some recent weak US data also supports rate cuts expectation, which usually it's expected to weaken the US dollar. But as it is, not all the Fed policymakers are agreeing that they want to cut interest rate at this point, and this makes the dollar a little bit shaky. Then if we consider the weak inflation data from last week, it also further supports expectation of an interest rate cut. Now, if we look at the economic calendar for this week, you'll see that we have some major high impactful events that everyone is looking forward to, especially from the United States economic docket. Now, besides the retail sales data that we are looking forward to tomorrow, 12:30 p.m. UTC, on Wednesday we have the Fed interest rate decision, where it is expected that the Fed will be maintaining the current interest rate at 4.5%. And I don't know what's going to happen. No one knows. We could see a surprise, maybe a cut in interest rate, as the expectations around an interest rate cut has been very, very high in recent times. So we look forward to see what the actual data is going to be on that one. Will it be just as market had expected, below expectations, or even beyond expectations? Then, of course, the Fed chairman is going to be speaking as well. Is going to be taking questions from the media on Wednesday. That's about 7:30 p.m. local time. So that's 6:30 p.m. UTC on Wednesday, where a lot of people want to listen to what he has to say, as it's his narrative, or let me say his rhetoric, will be giving us an insight into the Fed's monetary policy decision. So these are very, very high impactful event that majority of market participants will be looking forward to. And of course, they're going to be playing a significant role in decision making. Now, besides this, we also have the ongoing geopolitical tension. We have this war threat between Israel and Iran. Both of them are exchanged strikes on each other in the last 3 days. And of course, it's also shaking the global market at this point in time, bringing in some uncertainty. And of course, when there is fear, money often runs to the US dollar safety sometimes. But this time, gold is also going to be stealing that spotlight at the moment. So the US dollar and the gold commodity will be sharing that spotlight. So who is going to win that attention, which is what we don't know. But at the meantime, if we look at the technical structure on the DXY, of course, we know what DXY is. That's the US dollar index, which gives us a technical overview of what is going on, or how the value of the US dollar has been in a long time. Now, what you're seeing on my chart right now is the US dollar index for the 4 hours time frame. And what I did here on the 4 hours time frame is to capture the character of price action in the last 4 weeks. I don't really want to go too far, as we want to focus on the nearest trading activity in this market. And after looking at what has been going on here in the last 4 weeks thereabout, you will see that the price had evolved into a descending channel. In fact, we have some series of lower highs and of course lower lows, giving us both the resistance and the support line of that descending channel. And in the last 4 to 5 weeks, price action had remained confined within this descending channel. Now, zooming into the structure here, taking into account the last 2 weeks thereabout, we have the $98.50 level, which had been a major, or let me say a robust support line, as you will see here. And not until last week, prior to the beginning of the Iran-Israel situation, we saw the price of the dollar drop significantly, breaking down that support line and evolving into what is looking like a consolidation phase. So the last 3 days thereabout, you can see price is ranging. So we have a range bound structure between the $98.50 level and the $97 area, to emphasize the prevailing uncertainty as market participants anticipate, or let me say prepare for the outcome of both the FOMC and the retail sales data, which is expected to play a significant role in the direction of price action. Now, one thing we need to understand here is that whenever we expect this kind of major economic event, there is a high chance that we could see extended sideways trading activity, which is obviously happening at this point in time as price remains confined within that range. Now, the reason behind this is basically simple. Major key players in the market may want to step aside from the market, waiting for the outcome of this data to come in before making any aggressive bets. So as a result of this, we see a range-bound structure on the chart, and you all know how we use our range-bound structures in this community. We exercise patience and wait for price to either break out the resistance line to give us an opportunity to buy. In fact, if price breaks out of the resistance line, it will also have broken out of the resistance line of that descending channel, giving us a beautiful confluence to capitalize on an uptrend scenario. But if that is not the case, a breakdown of the support line of the range-bound structure will be confirming selling ideas, and of course this could probably lead to a situation where price drop further into the support line of that descending channel. So at this point in time, we are at a critical juncture in this market, supported by both technical and fundamental aspects. So we want to be very flexible, as this week is a data heavy scenario. So the chart, we need to wait for confirmations on the chart before we want to be jumping into any trade. And of course, considering the FOMC meeting, the Powell speech on Wednesday, these are very, very important events that will be guiding our decisions. So with this understanding in mind, let's delve into the assets we are monitoring for this week. And of course, the first asset we are going to be taking on is the, which one is that again? Okay, the USOILSPOT, right? So we are going to be jumping into the USOILSPOT, one of the major assets we have been following for a very, very long time. Now, if you look at the chart here on the USOILSPOT, the first thing I notice on the 4 hours time frame is the fact that price action had finally broken out of the $70 level for the first time in about 3 to 4 months. So this is the first time price will significantly break out of the structure, and following the breakout, the price had gone through a consolidation phase. Now, what could be the major reasons behind the breakout? Well, first of all, it is expected that oil is going to be getting more expensive because of the Israel-Iran situation at this moment, and people may now start getting worried that oil supplies might be affected, considering the fact that Iran is one of the major suppliers of crude oil in the global market. But at the same time, traders are being careful because China's economy might be slowing down at the moment based on the recent economic data coming out from that space. And Trump himself is not, might cause problems with new trade tariffs and the likes, which everyone, at the moment, the US president, everyone believes that he could come up with any form of trade tariff anytime soon. So this has brought in some level of uncertainty in this market. But if we consider things from a logical perspective, the Middle East tension, the Israel-Iran situations, raising fears of broader conflicts may disrupt oil supply. And this could further escalate and then make people more worried and want to buy more of crude oil, increasing that demand. Then one thing that we also get to learn during the weekend was how Iran is considering to close the Strait of Hormuz. Now, this is a key route for I think about 20% of the world's crude oil. So this is where they usually pass. And if Iran considers closing this Strait of Hormuz, it could bring threats to this checkpoint, often causing oil prices to spike because they will have to take another route, making oil much more expensive to buy. So at this moment, I want to lean towards a potential uptrend situation in this market based on this scenario. However, in as much as this is the case, the uncertainty around Trump's tariff is still very there. Potential weakness in the Chinese economy is also there. Now, this for me is putting the market in a limbo. We have the FOMC minute coming up on Wednesday. We have the retail sales data from the US coming up tomorrow. And of course, the geopolitical tension too is also there. And if you look at the chart here, after the breakout, you will see that the price has gone through a consolidation phase, trapped within the $72.50 level, and of course the $70 area to emphasize the prevailing uncertainty as a result to what I just explained earlier. And of course, with a range bound structure, we want to exercise patience and wait for price to either break out the resistance line, that is the $72.50 level, to welcome more buying ideas, or break down the $70 mark, which lines up with that ascending trend line you see here, to inside a sell-off. Now, with this information in mind, let's scale down into our execution time frame, that is the 1 hour time frame. Let's see what is going on the 1 hour time frame. So this is what I was able to come up with this morning. So I saw a spike. We saw price rise significantly at the beginning of the week, got to the $74.85 level before we saw price drop back into where it started the week at the $71.35 level, giving me a range bound structure to work with. Now, with this situation here, that is this range bound, we want to wait for price breaking out of the resistance or the support line to trigger some trading opportunities. And of course, you will see here the support line appeared to have been broken. Now, I'm not willing to jump into a sell right away, considering the Middle East tension I talked about, which could disrupt oil supply from the region. The path looks to the upside at the moment. Now, if I want to consider selling, I would like to see a confirmation happen before I do so. Now, looking at the situation we have here right now, we can see price had already broken down the support line. So let's see if the market will come back and retest the structure. If it does, continue selling pressure around that area could welcome us to push price to the downside. So this is basically what I will be looking at before I jump into a sell. So this could welcome selling ideas for me. So I'm not willing to jump into a sell right away. I'll just wait for some significant confirmations to come in before I jump in. But trust me, I will always update us accordingly on my Telegram platform if anything new comes up. But at the moment, I remain very bullish on a long-term perspective. And where am I looking out for buying ideas? Well, if the sell drops to as far as the trend line, I want to see how the market will react to that trend line. So if at any point in time we had the opportunity to sell, maybe the breakdown of the structure, then we could look at a breakdown of, so if we sell and price goes into the straight line, we would like to see how the market reacts to the structure. So if a breakdown retest happens, then this will confirm that sellers are taking over the market. But if price gets here and we begin to see buy pressure, like a double bottom structure, inverse head and shoulder pattern, then we buy the breakout retest of the neckline to join that uptrend move. So that is one way I'm going to look out for buying ideas. But if that is not the case, Then a breakout retest of the $72.50 level will welcome buying ideas for me. In fact, if you look at the bottom of your screen, you will see that I already have a buy stop order above the $72.50 level to capture any form of bullish expectations here. And if price goes ahead to break out of the $74.85 level, I will be adding more buy positions to my existing trade. So this is basically what I'm looking at on the US All Spot for today, at least for the first half of the week. And of course, I will be updating us accordingly on my Telegram platform as we continue to monitor price action. So if you have any questions whatsoever as regards to this narrative I just put out, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And I hope you've marked out the structures accordingly, as I have illustrated here, as they are going to be playing a significant role in deciding whether we are going to be buying or selling from this particular area. And please remember, I mentioned earlier that. For me to sell, we want to wait for significant confirmations before joining, and that the path of least resistance for US crude oil remains to the upside. Now, if the Middle East tension worsens, that is, if we continue to see retaliatory attacks, or maybe Iran shuts down the Strait of Oil, could break higher and of course continue the trend to the upside. But if China data comes out weaker again, if we see data from China coming much more weaker, we could see a short-term pullback in the price of US crude oil. So let's see what happens in the next couple of hours today, especially before the New York session comes in. So I want to wish us all the best of luck on the US All Spot. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY, and of course, looking at the 4 hours time frame, this was what I was able to come up with. First of all, for about 5-6 weeks thereabout, the price of the US dollar had continued to drop. We've seen the Japanese yen increase in value tremendously since the beginning of the year. But thereabout, you will see we had a descending trend line following the series of lower highs here. Now, one interesting thing about this whole structure is the fact that despite the descending trend line, despite the series of lower highs, we are yet to see a lower low. Now, if we look at what is going on here, ever since the lower high started, we see that that area between the 142.100 and the 143.00 area had played a significant role in negating any attempt by the sellers to continue that downtrend move. So what this simply means is that we have a robust demand zone here. Sellers are finding it difficult to break through, even though there are a series of lower highs. And of course, this area here is going to be playing a significant role this week. Now, if we look at the fundamentals in this market, the Japanese yen has a high tendency of getting stronger during this period. Now, people think the Bank of Japan may start raising interest rate or tightening their monetary policy very soon, which is a very strong supporting factor for the Japanese yen. And of course, there is tensions and fighting in the Middle East. And of course, in times of global trouble like this, people like to put their money in safe currencies like the Japanese yen. Then, of course, the dollar on the other side is not doing very well. It's losing value in a long term. I showed you what things are looking like on the DXY, where we saw a descending channel, which emphasized the dollar losing value. And so more people are choosing to buy the yen instead. Now, with all of this reason, beginning to think that the path of least resistance for the USDJPY remains to the downside based on these factors, which is further supported by this descending trend line. Now, my concern is we're going to see a situation where this demand zone will be breached and broken to the downside. So let's look at how many pips do we have between where price is now and that demand zone. At least we are looking at a minimum of 100 pips there. So, and if you look at the bottom of your screen, you will see that I initially had a buy position earlier this morning, and of course the buy position is not doing well at the moment. I think I'm with about 6 pips loss, I guess. Then I also had a sell position as well, which is roughly about 1 to 2 pips thereabout at the moment, and I already have a stop loss for the buy position. So if I get stopped out, all well and good. But if the sell continues, then I'm also in the sell. Now, looking at the structure here, let's zoom into what is going on presently. So we want to see what is really going on around this descending trend line. As you can see, price is yet to break out of the descending trend line in about 6 to 7 weeks. So we want to see on our execution time frame how market participants are reacting to this important juncture. Now, when we scale down into the 1 hour time frame, this is what I was able to come up with. So looking at the structure here, the week started on a bullish note. As you can see, price started at around the 143.950. Then it culminated, found the resistance at the 144.750. As you will see, it came back again, and it appears price is consolidating, confined within the 144.750 and the 143.950. Now, the inability of sellers to break through here is a concern. Could be a flag that buyers may come in such a way that we could see price break out of that descending trend line for the first time, welcoming an uptrend scenario. Now, with this situation here, the resistance line is an area where we want to be looking out for buying opportunities. However, due to the inability of sellers to break through, I placed a buy here. Now, with this whole situation here, I also placed a sell. My buy position, my stop loss is around the 143.950. So if the sell moves, if we see price move to the downside, then I get taken out from the buy position while the sell position will be in profit. And of course, I want to see price break down, retest the 143.950 to add another sell position so that I can maximize the potential of that bearish move. And of course, as soon as price gets into that key level, we will have been running with a minimum of 100 pips on one position and almost 180 pips on two positions by the time price gets here. So we move all stop losses, secure the position while we wait patiently to see how price will react to the key level. Are we going to see a breakdown retest to welcome more selling ideas, or are we going to see buy pressure resume above the 143.00 area to incite a bullish move? So pending that time, with the way things are going right now, I think the path of least resistance remains to the downside in favor of the yen due to expectations of interest rate hike. The Middle East tension too as well plays a significant role. So at this moment, let's see how price reacts to this range bound structure, and depending on what direction the breakout happens will determine where we are going, at least for the first half of this week. Then another thing I would like to say here is if the geopolitical tension stays high and the Fed sounds dovish, we should consider the Japanese yen to be very strong, so selling is going to be much more reasonable. But if the Bank of Japan downplays inflation risk, or the equity market rallies, then we will be looking out for short-term pullbacks or bounce rates in favor of the US dollar. So that is basically what we are going to be doing. Let's allow the structure help us to navigate the direction. So in the meantime, I have two positions on the USDJPY. I have a buy, I have a sell. stop loss in place for the buy, and if the sell takes over, then we will get stopped out from the buy, and of course see how we can maximize the bearish move. So that is what I have for you on the USDJPY. If you have any questions, feel free to let me know in the comment section. So I'll take another 5-10 seconds off, and I'll be back to move on to the final asset on our watch list. Stay tuned. Okay. So I hope we've all marked out the structures accordingly on the USDJPY chart. We have a simple range bound structure as price continued to oscillate around that descending trend line we identified on the 4 hours time frame. So let's see where the breakout is going to happen. Is it to the upside or is it going to be to the downside? But generally speaking, the tendency for price to drop is high due to the factors I talked about earlier. But we shall be on standby on whatever opportunity will happen. So I wish us all the best of luck on the USDJPY. So moving into the final asset on our watch list. So the final asset we are looking at this morning is the XAUUSD, popularly known as the gold spot. And of course, I will not be going into the higher time frame. I already done a video on that at the weekend. I hope you watched it. And of course, I did give an update on the structure I'll be using to navigate this market this morning. As you can see on the 1 hour time frame. So this morning we saw the price of gold rise significantly. In fact, throughout the weekend, massive move to the upside at the opening of this week. Though we saw some, how many pips was that? We saw about a 200 pips move before this downtrend scenario began. So we saw price started the week around the 3,431 ish. Then we saw price, as soon as it tested the 3,451 ish, we saw price drop down and then break down both the trend line and the 3,431 ish, which is the support line of that range bound structure, to incite a massive, as you can see here. So I missed out on this one, and of course I'm looking at what ways can we use to capitalize on this opportunity. Now, one thing I shared this morning, I shared this. We had the support line that we look out for a breakout retest. So if we are looking at selling, we want to see price maybe come back, retest the structure in an attempt to continue a move to the downside. It could be into the 3,400 or even break it to the downside, depending on how price reacts to that structure. And of course, I'm beginning to suspect that buyers may be coming back into the market. Of course, the path of resistance for gold still looking bullish at the moment. I still strongly believe that the price of gold still has a lot of room to. The moment is looking as if it's not moving in that direction, But one thing for sure is that it is still close to its recent high, and this is because traders are being cautious and trying to figure out one, if the conflict in the Middle East will get worse, which usually makes people buy gold for safety. Then we also have the Federal Reserve situation. Majority don't know whether the Fed will cut interest rate or not, which affects the value of the US dollar and the demand for gold as well. And because the US dollar has been weakening in a while, the gold tends to be more attractive to investors, especially those who are using other currencies to buy this asset. And this, of course, makes the path of least resistance for gold to the upside. So if you look at the bottom of your screen, you will see that I already had the buy position triggered. Buying around here is looking reasonable, and the reason why I'm saying that is if we go to as far back as Friday's trading session, we saw how that level around the 3,415 was serving as a demand zone. As you can see here, we saw how sellers found it difficult to break through, and despite this week pushing price to the downside, we can see that as soon as price got into this area, we begin to notice buy pressure resume again. So as a result of that, I have risked a buy position on this particular trade. Let's see how this is going to play out. And of course, as soon as price gets close to this trend line, I will move my stop losses, secure the current buy position, and wait to see if price will continue to climb up, and then welcome more buying ideas. And I think I'm going to be doing some live trading today in about an hour from now. If you are interested, you can join me as we trade the gold market together. So at the moment, I have a buy position running, and of course, I want to see how far this bullish momentum will go. If it comes in here and I begin to see sell, then we could see a situation that could see price drop maybe for a short term into the 3,400 area before the next uptrend scenario will happen. So let's see how the market will play out here. I'm very hopeful that we are going to be doing very, very well on the gold commodity this week. So like I said, if geopolitical tension escalates further or the Fed hints at cutting interest rates soon, gold is definitely going to rise. But if the Fed stays hawkish and equities remain strong, gold could retrace maybe into the 3,400 before the next wave of bullish momentum will happen. So let's keep this in mind. And if you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off again. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. All right. So in the absence of no questions, I want to assume that we are all on the same page. And it's on this note, we have come to the end of today's Forex Morning Mastery. Today, we were able to take on the 3 financial instruments on our watch list, which includes the USOILSPOT, the USDJPY, and the XAUUSD, where we were able to understand what is going on in this market space, and of course using that information to mark out some structures that we are going to be using to navigate the market, at least for the first half of the week. And I do hope you are able to mark out the structures as we have done in the course of the session. If you have done so, well done to you. So all we just need to do is exercise patience and allow the structures to mature. For those of you who joined us for the first time, I do hope you are able to gain one or two things from what we have discussed here today. Trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach. So in that regard, I look forward to seeing more of you on Wednesday, same time, 8:30 a.m. UTC. That's 9:30 a.m. West African time, as we come here again to review how well these assets have done and of course prepare ourselves for the second half of this week. So it's on this note I would like to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening. Bye.